We're back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button. Tell me you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So from the bigger picture, the SPY continues to go downwards. It's been under a bear indicator since way up here at 4,400, and it's kind of consolidating right now, right? Some people think that we're close to the bottom, or we may retest a new low, right? And today, our SPY bot, as you see it popping up right now, sent us out a bear indicator at 10:35 a.m. and the charts showed it pull downwards and puts went up nearly 3 to 4x. And if I go ahead and zoom in here on the 5-minute on the SPY, you could see that it lasted all day, even through this consolidation. And just now, in the aftermarket hours, it's getting a slight bull indicator. It may signify some strength into tomorrow, but like I stated yesterday, it doesn't always mean that. You could see how it's pulling down and so forth. And we're going to break everything down right now going on with the S&P 500 index, the overall market, how the Fed has affected the market, and how earnings calls have been affecting the market this week. But before we break it all down and we jump into it, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you want to get on early with us every single morning, check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with the S&P 500 index and everything going on within the volatility. So the home run of the day was spectacular and beyond expectations. And if you want to get on early with us every single morning, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I mentioned this morning. Every single one of them jumped 5 to 10%, and one of them nearly missed home run territory, and that was MDJH. It reached 18% plus at its highest point, but that was not the home run. The home run was spectacular, and this is one that I caught, and I mentioned it 7 minutes after. I caught it at 10:07. It was sitting at around $4.80 to $5, and in 7 minutes, it took off nearly 20 to 30%. It halted, and the stock was INDO, guys. And this was the chart when we mentioned it, when we caught it, and how high it went. We caught it here after the bell under a bull indicator, full strength, halted, slightly pulled back after jumping to 750, came to 620, and took off to a highest point of 40% plus, guys. If you guys want to get on early with us every single morning, check out the link down below in the description to the Discord. We look forward to having you join us. Let's jump into these charts. So here we are with the S&P 500 index, and it continues to pull lower, and the fake outs continue to arise, right? We talked about the fake out up here, slight bull indicator, and we compared it to down here if it was going to last or return back towards those lows. And now we see it. It went up a little bit, started to pull back again after this Fed meeting, and also overall picture, I stated since way back here that we were in the middle of a correction slash crash, right? We've been talking about this for weeks, and you could see how clean those bear indicators, slight bull indicator, lasted very short, 2 days to 3 days, started to pull back down, and we've been under a bear indicator since way up here at 46.53. Now, the SPY has also been a great way to track and make opportunities out of these movements. That's why I released the SPY bot. I think it's been a great addition, and as you can see it one more time, I'm going to pop it up. The SPY bot today sent, since 10:35 a.m., a bear indicator, and the rest of the day was pretty bearish. And those puts went up 3 to 4x. Now, the reason being why the S&P 500 index has been going lower and we had this fake out was the fact that the Federal Reserve meeting, it was all looking kind of positive. It was all looking kind of great the first few moments. And that right there is what created this fake out, but yet all the way towards the Fed meeting, things were going down. So how would someone in their right mind think that things are just going to recover because the meeting is already in process, right? So around 2 p.m., we had fake outs and stuff. And yesterday, our SPY bot saved the day with that bear indicator a few moments after, and everything started to plunge, right? And it has to do with the fact of the persistent inflation, persistent chip shortages, and not just chips, but everything in general. And anything that had to do with chips took the beating today, like Tesla, Apple, and all the different chip makers. If you look up those stocks, because if I go ahead and pull up one by one, it's going to take some time, and I want to focus in on the S&P 500 index here. But look at those stocks that you can think of right up in your mind and look at their charts, they have been destroyed. And it has to do with the Fed statements. On top of that, the earnings reports of this week, a lot of them have been looking great, yet the stocks are falling, like Tesla. Tesla today continued to pull back, and it's been under a bear indicator since way up here at $1,073. And today, our bot, right, which we're going to release the Tesla bot very soon as well, sent out a bear indicator since the beginning of the day. It was looking kind of strong here a little bit in the pre-market, sent a bear indicator right here at 940. It went all the way down, literally almost $120. I mean, these puts printed. They went up nearly 3 to 4x in a matter of just minutes here at the beginning of the day. And through the volatility, they just continued to print and so forth. So there's been a lot of volatility within the stock market, having great earnings, and then all of a sudden stocks falling, and then also the SPY getting hit, right? And getting hurt. And why? Why is that? Because of the Fed statements aligning with what CEOs have been saying for the last several weeks and all these earnings reports, right? Every single CEO that has came out at every earnings, whether the earnings is great or not, they've stated that they're facing shortages and persistent issues with inflation in their prices and having to probably raise their prices. Like Netflix, it has to raise their prices. All these different subtle movements and actions are aligning with what the Fed has been describing. It's not just coming out of thin air, it's actually happening. So now that everybody knows that the can got kicked further down the road, it doesn't make anything just better. It just lets us know that rates didn't get risen right now, or they're not happening until March, right? So could there be a dead cat bounce going into February? Because that's what a lot of people are hoping for. It's a possibility, but the last 2 times we saw this try to go up, it's been pretty weak. And what's really pushing it down, even beyond just the Fed and the meeting and all this, fear and stuff, it has to do with the fact that the 10-year Treasury has been spiking since the beginning of the year from 1.48 to the highs here of 1.84. This is super important. The higher this continues to go, the more pressure stocks are going to feel. Now, by any chance, if this goes ahead and inflicts downwards or continues to go a bit lower and cool off, it doesn't guarantee a rally or anything of that sort, or stocks are guaranteed to go up, but it could create some room for stocks to try to reverse and go upwards. Is it going to be something long term? I don't think so. It'll be very short lived because the pressure of March rate hikes is still in the limbo. It's still in the air, right? It has to happen for us to see how the stock market's going to react to it. Until then, volatility will persist, and we're seeing it in the NASDAQ as well. The NASDAQ has been under pressure the first time way up here at 15,000, then down here at 14,000, and we're going towards back 12,000 almost, right? Because it touched right here 1388. If it breaks through that, we will touch 12,000 area territory, and that could create a 20% crash scenario for the NASDAQ and tech stocks. Now, the S&P 500 index, I've stated this in previous videos, is in a very important point because the last time we got white with red borders like this, we did get a slight reversal, and that was back here in the correction that I talked about as well in September, once this first bear indicator popped up, that we went from 4,500 down to 4,200, and these were the white with red borders, and then the reversal we got. Now, before this point and where we're at right now, the last time we got that was way back here in the 2020 crash, guys. This was the time period where things were looking pretty volatile, right? It went downwards. On the 4-hour, we got that bull indicator, but when we look at this type of time frame very far back, I like to look at the 1 day, because this is how you know that you can actually distinguish the fake outs. It went under a bear indicator since 3,300, went down, and right here on the 4-hour, as we saw, it got a little bull indicator that was very short-lived, lasted about just a few days or two, and then it started to pull downwards, and you can see the fake out there, right? No bull indicators popping up, and continued the pressure to the downside. When this happens, this is extreme weakness. This is weakness that you are paying close attention to, and we can't really time the market, but we're trying to find that bottom, and the bottom will start to look like this, guys. When you get that red with green borders and a bull indicator, at least not exactly the bottom, but it'll start looking that way. Even if it goes up and comes back down, hopefully it double bottoms, but in this case, it just went straight up. But that's what I'm really looking for. I'm not trying to time the market, but I'm trying to clearly navigate through this volatility. And if we come back over here, you could see it here as well, right? It touched white with red borders, touched white with red borders. This time, no bull indicator, still under the pressure of that bear indicator. And then here we got that full transition, bull indicator, and strength. And that's what I'm going to be looking for here. And right now, we are in correction / crash territory and trying to retest these lows here of 4,200. If that gets broken through, the next point of reference is down here at 4,000. That's the key level I'm watching. And if that breaks through that, then it's 3,600, which would be the 52-week low of the last 12 months. Those are the key levels to the downside. And I'm going to be watching here as this bear indicator continues to persist. If a bull indicator tries to pop back up, if there's a reversal, and if there isn't one, that's how we know it's a fake out, just like it did here and like it's done in the past several times, guys. This is so important to realize how volatile the market's going to be, and clarity in the charts is going to be all that difference. It's going to make the big difference of making opportunities out of the downside or the upside, and also being able to catch dips and sell on the rips when that strength comes in. Those are the key things right now going on within the chart, the 10-year treasury, and it adds up with this right here. The S&P 500 closes lower, gives up earlier gains as volatility continues. And this was yesterday, right? And it has to do with the fact that the Federal Reserve stated one key thing that a lot of people didn't like. They stated that the central bank has quite a bit of room, flexibility, to raise rates before negatively impacting employment. Since employment, according to their measures, is at full capacity, that means that now they have the opportunity to raise rates even faster and even more aggressively. Instead of 0.25 per raise, it could be 0.50. I mean, if they do 0.50 4 times this year, that's a 2% hike in just 1 year. That's a lot. And if you listen to the Federal Reserve and their statements, they kept stating that they're going to use their tools to go ahead and combat, right, inflation. And that's interest rates. That's like the only tool that they have in their toolbox that can go against it. So if they're really aggressive, they are not too worried about stocks pulling back or assets, because it's going to all be transitory, right? They've used that word before. They're probably going to say it's just temporary. Everything's going to be fine. And the cool thing about the stock market is if you zoom out, every single time there's been corrections, which I'm going to circle some of them that I see here. One there, one there, one there, here, here, and the one we're in right now, right? Corrections and crashes. There's always that bull market that comes after, right? I always say this is not where investing ends. This is where it begins. And this is not a setback, if not a setup for the next bull run. And we've seen it time after time. I said it plenty of times here, and look at the bull run we had. I've said it way back here. Look at the bull run we had. I even said it there. I said it here, and I said it here. I've said it every single time. And even though easy money policy is no longer in the picture, I know a lot of people are probably concerned about that. That doesn't completely affect the volatility and opportunities that are in the market, okay? There's plenty of opportunities to be found every single day, weekly, and even as I'm speaking and as we're seeing these charts, there's opportunities for the long term that are actually brewing, right? They're creating, they're unraveling themselves, and there are some huge ones out there. There's some stocks out there that some people would have probably paid more for that is now half that price or even 70% of that price. So, for example, if I like the stock that was $40 at its high and right now it's $20, $15, I should be very excited, because someday, whether it takes 6 months, a year, 2 years, 3 years from now, it's going to be $40 and probably even more if it's a generating profit company and a good company, okay? I'm not saying none of these tech high flyers or anything like that. It has to be a strong company making money. Those are the winners in the long term. Now, tech stocks can fly again, whether it's a few months from now or a year from now or 2 years from now, but they're always going to end up in the same spot again. You want to find stocks that are making money, because right now in the stock market, there's the next Apple, the next Tesla, the next Amazon sitting right before our eyes. And it's going to unravel 5 to 10 years from now. As always, guys, thank you guys so much for watching, and let's make some money.